Okay, let's go ahead and get into the stock market technical analysis. We'll take a look at the charts, see where things are heading based off the information that we have today in the charts. So if you guys are finding value in the content, please drop me a thumbs up. It does help the channel. I do appreciate that. Thank you very much. And if you're interested in joining the private member group, feel free to check it out. No obligation. It's on a month-by-month kind of thing. And it's like $5 a month. So check it out if you're interested. Link in the description below. I just put out a private member video this morning with some trade ideas. Okay, so triple Qs. What do we got going on? You know, not much, at least for the last couple days. We've been kind of just hanging out up here. The market's waiting for the Fed this week and for the CPI reading to come out. So those are the two market moving events. And in general, I think we probably just kind of hang out and don't really do much, don't really go anywhere until those come out. So that's Wednesday is really the most important day. That's tomorrow. We'll check that out. And then we'll see where things are heading. The triple Qs, the biggest thing that the charts tell me, you know, if I go to the weekly chart, the longer term chart, you can see we still have that negative divergence. It's been building for quite a while on the weekly. But in general, if you look at this recent price action, like right here, okay, and you popped up to make new highs, and yet momentum still less, all right? Still lower momentum on both momentum indicators. So it tells me that this move up here on the weekly chart is likely going to get faded. But, you know, that's a weekly chart, so it can take some time. On the daily, we do also, let me flip back to the daily here. We also have negative divergence, just even on the short term. You can see it's kind of just barely hanging on right there on the RSI, and it is on the PPO right there. So we also have negative divergence, but we don't have any sell signals. We don't have any breakdowns, or, you know, we don't have anything falling back down into breaking support. On the daily chart, I do see the most recent move. We've got some support here, and looks like another reaction there. So that's the trend line I think to watch. A break of that trend line would be the next sell signal, at least on the daily chart. All right. I think on the smaller time frames, the 5-minute and stuff, we could sell down to this trend line. So that is very likely, I believe. But for a swing trader, trend trader, I think we need to see a break of that trend line for the next sell signal. Okay, so I'm back on the weekly chart for triple Qs. One thing I just want to kind of point out, I know there's a lot of mania, a lot of kind of foaming at the mouth bullishness, mostly due to NVIDIA. That's really all I hear about half the time, is how well one stock in the entire stock market has done. But it's heavily weighted in the indices. So the media can talk about the S&P 500 and the tech sector doing really well because of the weighting of that one stock can pull up the indices. So let me give you an example of kind of what's going on. This is triple Qs. If I roll back, and we're on the weekly chart, so we're going all the way back. You know, right now this is the last high of 2021. So 2021, and basically if I look at kind of where we're at, just in general, we're about 13.5% higher than we were back in 2021 on the triple Qs. Now, if I go to the equal weighted indice, triple QE, this means every stock in the NASDAQ 100 is equal weighted, so you don't have the heavy weighting like you do in the just triple Qs based on NVIDIA. In this sector, we basically have a double top. Here's 2021 right here. We really haven't gone anywhere equal weighted since 2021. So in general, what that tells you is that, you know, a very small percentage of stocks have dragged the indices up, but most of the stocks are not performing in the same manner as just those handful of stocks. Because if everything was equally weighted, then you can see we're basically just back to the highs of 2021. So it's a little bit of a different way to look at it. And then if you go to the SPY, again, SPY's market cap weighted. So you have basically NVIDIA and some of the FANG stocks kind of holding up and pushing the indices higher. And this is what the media talks about, is, the S&P 500. But in general, that's, you're pretty much looking at very small handful of stocks. So this one from 2021 is up. Well, actually, this one peaked out in 2022. Tech stocks peaked a little earlier, but this one's about 10% higher. And then if you go to the RSP, this is equal weighted S&P 500. You can see basically back to 2021, we're pretty much at the same area we've been at in from 2021. Now, real quick, I want to take a look at the SPX. This one has been around. This is the S&P 500 index. It's not the SPY's an ETF. It hasn't been traded as long. The SPX is the S&P 500. This one is, we can go back and look at past timeframes. And what I want to do is, this is what we're looking at now, 2022. We're kind of making a new high. Again, this one is market cap weighted. So you've got a handful of stocks pushing this thing up. You also take a look at the weekly. You got negative divergence there on the weekly. But the thing I really want to point out is if I roll back, I want to look at the last period of inflation that we had was back in the 70s. That's really the last time we had any kind of inflation. And here it is right here, you can see, oh no, sorry, that's 2000s. There it is, right back here. So here's the last period of inflation that we had. It was basically a decade of inflation. And you can see basically what we did is, kind of made a high, pushed up, made a new high here. All right, this new high, all right, right there was, as you can see, a divergent high. All right, you see the momentum was basically falling, all right, as we pushed up and made a new high on the weekly chart. And then that was followed by, boom, a big move down, taking out the lows, basically a big bear market. This decade had a couple bear markets basically in it. You can see you pretty much had one here. This was a drop of 35%. Then you had obviously the big one here. This was a drop of 50%. And then you had a smaller one here, which drop of about 20%. So you had 3 bear markets in an entire decade. Meanwhile, inflation continued to plague the markets, and the markets ultimately didn't really go anywhere. Your money, if as a long-term investor for this decade, you basically rode out 3 bear markets, and you were and inflation, was still running. Your dollar was losing purchasing power. So the big thing I want to point out is, look, you can make new highs, all right, just like it did right here, but it built negative divergence on the weekly, and it had a big bear correction. So if I go back to kind of where we're at now, you can just clearly see that, not to say we can't go any higher, but we do have basically a higher high in the price, and the momentum is starting to diverge, and clearly you've got kind of equal high there, but you do have divergence starting to build on the weekly chart. So we can keep going up, and again, going back to, this is a weekly chart, so you can't take positions, enter and exit based on this. We have to go down to smaller time frames, but it just gives you an idea of what could be. We might go up for a few more weeks, maybe even a few more months, but that easily could be followed by a 50% correction. It was in the past, it could be today. Okay, Apple. So I want to look at some of these individual stocks. So Apple's doing what I thought it was going to do, is pop up and make a new divergent high. Again, I've been talking about this for weeks now. I thought Apple could continue higher, and there they go. They're popping. Basically, they just came out with some AI news. A lot of these stocks, they're just saying, they float the word AI, the market and the algos buy it up. This one, though, that I'm noticing, if I go back and look at, this is going back to January of 2023, you can see we have a clear trend line. All right, we hit there's support, had another reaction there. Okay, and then, even down here when they gapped it down on earnings, they bid it back up, back above that support. And then we broke, all right, we broke support. And it looks like we're going to come in for a back test. So might go a little higher here. But so I think we could, over the next couple of days, maybe trade up a little bit higher. But in general, it looks like we're going to be backtesting resistance now. And then we don't really have that negative divergence on that one. So that one might have, we might have to build for a little while. I mean, we have kind of an equal high on the RSI. The PPO, to me, looks like it's kind of made a new high, at least from there. So maybe a little work to do. Again, nothing I want to short, but I would be looking for, I think what's going to happen is maybe we can backtest this resistance for a little while, start to build that negative divergence a little bit cleaner, and then reject. Okay, so that's what I'd be looking for. Wheat still looks good. It has fallen to support yesterday. You can see I have a support line right about it's about 577 or so. The 200-day is just below that, so that looked like pretty good support, and they're buying it up today. So again, I think wheat is starting that next push higher, and will likely take out those highs right there. So I like wheat as a long. Again, we're coming off a big bullish falling wedge, and some big decent bullish divergence that was building. So in general, I think wheat is looking strong. And, we basically have a series of higher highs and higher lows. There's a higher low, higher low, higher low. This could even come down to this potential trend line here. But in general, I think we at least get a push here, and then obviously higher highs. So looking for wheat to continue to trend higher. The financial stocks to me look like they've topped out. On this one, we basically have, this is XLF. You can see right here, boom, made a new high on this daily chart, and from that former high, and yet clear negative divergence. All right, momentum dropping off. So that divergent high was sold into, and again, I think we are continuing lower down to about 38.70. If the financials continue to roll over, it's likely the market's gonna take notice at some point. And you can see my financial stocks, they're pretty much all down today. Couple of ag commodity stocks that look like they're both sitting at support today. MOS, Mosaic Company, you can see on the daily chart, support, 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 and right there at support. Sometimes you can push down and do a little flush out move, but in general, it's at support. What you could do if you want to be conservative is wait for a break of resistance. All right, that'd be an objective area to go long, or you can obviously, it's higher risk but higher reward, go long at support. The measured target of the move is the widest part of this wedge, which is a decent wedge. So depending on where we break out, I think we're going to be pushing up into the 42 to up to 48 range, somewhere right there. But we haven't broken resistance yet. So again, it's objective to buy at support. It's objective to buy on a break of resistance. But you can always sometimes see some sort of little flush out move where they run a bunch of stops. Anytime you're at a key level, you almost just have to expect you're going to get some stop rating price action. Okay, and then the other one, NTR. This one, it looks like it's sitting at support too. You can see support, and then we're sitting right there. We only have two reactions, so it doesn't have to be a trend line. So I kind of want to wait to see if this one gets a reaction here and it bounces to validate that as the trend line, and then ultimately that would be a good buy opportunity for a long. All right, and I still have this one pushing up to 69 area. Again, this is also coming off a big bullish falling wedge, and the widest part of the wedge is about there. And we've already kind of broken out, so it's basically pushing us up into that area. And to wrap up, we'll look at the semiconductors, because again, this market's it's been about two things. Interest rates, which we're going to have some information on that tomorrow. And so I'm not going into the interest rate sensitive things like gold and bonds, because that's going to, tomorrow is going to, we need that information and how the charts react tomorrow. And then the other thing the market's trading off of is AI hype. So in general, you've got SOXX, the semiconductors, pretty much NVIDIA for the most part at this point, but you can see support, and we're just holding that trend line right now. I don't see any change or breaks of support yet. We do have negative divergence that has been building. Even, you can see here clearly on the PPI or PPO, a clear divergence there. So we're just waiting for a break of trend line support for a sell signal. And very likely, NVIDIA, when it's pretty much NVIDIA, when that one gets the next sell signal, this will also get the sell signal as well. All right, I'm going to go ahead and wrap it up here. Drop me a thumbs up on the way out. I appreciate it. Catch you guys on the next one.